Hi everyone, welcome back to ASX Market Watch and charting trend signals around the world. Thank you very much for joining me. Just a really quick midweek update, just because things are starting to turn over. Fantastic! We're having a change in the markets. Surprise, surprise. Really quickly, we'll go through the entire world as we usually do, starting with Down Under, of course. Down Under Australia, this is the All Ordinaries. Now, just really quickly, as what we were looking for was a close above 4,400. Pretty much a lot of people were looking for that, and it's possible that what we're looking at now is a false breakout. So, in other words, that's a breakout of the previous range there, and as you can see, if we just enlarge this bar here, this single bar right up the top there, many of you guys who've been studying at ASX Market Watch will know that single bar and the significance of it. That's basically the bar that changed the market right now, and that's what we're looking at from a false breakout point of view. What I'm still holding long positions, like ones that I've previously bought, and the All Ordinaries, like the trigger, the market switch for me would be a short term close below this one here at 43.25. And for a medium-term signal, it'd be below this one here, which should be about 42.30. So in other words, if the market comes down below those two levels, then that would be that would stop me from taking any more long positions in the market, and basically I'd let my current long positions just stop themselves out over time. So yeah, as the trailing stops evolve. So yeah, that's pretty much the All Ordinaries. Now look, really quickly again, if we are looking at a downward breakout, what we could be potentially looking at as a target is 4,000. Right on 4,000 there. Below that 3,900, sorry, and below that 3,800. So pretty much right on the hundreds there. That's what I'd be looking for, is if it does break down below that medium-term signal. We could be looking at 4,000, 3,900, and 3,800 after each other. And so yeah, that's just a really quick look at the All Ordinaries. But in the meantime, we're still in that no man's land. We're still in that sideways movement. The market is trying to move down, and basically we're still seeing that sideways action in between these two support and resistance places. Really quickly again, the VIX, the volatility index, I think last night it just moved up about there as well. So yes, it's definitely above its 50-day moving average. It's starting to move back into volatile territory, which is what you expect as well. The market doesn't go down in a smooth or up in a smooth curve for long. So yeah, basically just be aware that volatility is starting to increase. We might start to see some more unknown things happen, or some sharp moves, volatile moves in the market occur. Really quickly, the FTSE last week, we called the like a short-term exit signal right there, and what I was expecting was for the market to find support at this level at 5,600. That's currently where it's sitting at the moment. Now, basically, it's still in a short-term downtrend, and if it closes below this level, which it's very close to doing, if it closes any further down, that would be looking at a potential medium-term exit signal. Let's just look at a weekly chart. Yeah, no, it's definitely in a short-term downtrend, and coming very close to a medium-term downtrend. So what we had was we called our entry there, and we called our exit about there. So it came back to about break even. We got a little bit of action, a little bit of participation in the markets, and yeah, it's pretty much come back to break even there on the FTSE. One of better note would be obviously the S&P 500 in America. We called our buy signal there, and if we'd be looking at an exit signal if it closes below this particular trough here, and I'm sure it's going to come very close. That would be at approximately 1340 on the S&P 500. And yeah, so what we were looking at was with the S&P 500, they all of the markets around the world had met their initial targets, which was 100% of the previous move. That's basically that level there. So they all met them. We were giving you the top target just in case, but it looks as though the markets are turning over right now. And yeah, so again, not quite in a short-term downtrend yet on the S&P 500, but very close. And really quickly, what have we got next? Let's look at the Nikkei, because the Nikkei, again, called our short-term entry signal right there, and that was at around about 8,900, and currently we're at around 9,400. That would be a short-term exit signal for me. As you can see, the parabolic, see this trend line just drawn in there? That's your parabolic trend. It was really steep, and just to give you a better idea of that, looking at it at a longer term time frame, look how steep that is. It's that's full on. That's why you use trend lines under those circumstances, because trend lines can really measure a parabolic trend, a trend that goes up and up and up and up and up in a steeper and steeper curve. There's your early exit signal there, and today we're seeing the your short term exit signal on the Nikkei, and yeah, because it's closed well below the trend line and the 50-day moving average there as well. So no dramas, not rocket science in any way, shape or form. I think we got around about a 7 or 8% move out of there, and obviously didn't get out at the top. But you know what? I catch the middle of the moves, and I guess that's what trend following is all about. But really quickly, Shanghai Composite, this is what we're finding is support at 2300, and but still the Shanghai Composite is in a downtrend. There's no doubt about it. It's in a short-term downtrend. This is a medium-term downtrend on a yearly basis, and this is a short-term downtrend, as you can see. We called it a couple of weeks ago. There it is. There's your sort of level there and right there. But yeah, basically definitely in a short-term downtrend there, which is obviously not good news for Australia as well, guys. And that's what we've been saying over the last two to 3 weeks, is that a downtrend in China is not good news for the All Ordinaries. A lot of people follow that correlation there. And if you just want to get fancy a little tiny bit, let's look at the correlation, actually. We'll just get rid of this. This is the red one is the Shanghai, and the blue one is the All Ordinaries. So really quickly, as you can see, look at any sort of time frame. This must be around about 2008, I believe. So as you can see, the Shanghai starts to fall, the All Ordinaries starts to fall. The Shanghai makes a bottom, the All Ordinaries starts to make a bottom. Now, obviously, this is not 100%, guys, but it is something to take into consideration when you're trading and investing. And as you can see, Shanghai makes a top, the All Ordinaries starts to form a top, and they both fall in unison as well. And Shanghai makes a move upwards. That was around late 2010, which was probably the last decent up move that we had, and it wasn't even that great. But you could get a few decent gains out of the latter half of 2010. And as you can see, our market started to rally after that as well. So yeah, something to definitely be to take into consideration in your trading, and obviously keep your stop losses in on the All Ordinaries and in your individual stocks. Obviously, in the individual stocks that I'm personally holding, there's a few that have been stopped out. I think BLY is getting stopped out today, but ARP is still going strong. I think DOW is coming close to being stopped out. COF is still going strong. IMD is still going strong. Other ones, TOX is still going strong. I mean, beautiful trends, these ones. But there are definitely more that are starting to get stopped out. Anyway, I've waffled on for too long, guys. Have a great week. I hope that makes a little bit of sense. And have a great time in the markets. Keep your stop losses in. Ride the trends when they occur. Other than that, happy trading. I'll see you next week. Bye for now.